So welcome. Thanks so much for joining me here for today's presentation on claiming Social Security as an expat in Australia. This is the second part of this webinar series. I'm Ashley Murphy, the founder and principal of Arete Wealth Strategists Australia, and I'll talk about who we work with in just a moment. But before that, some important disclosures to be mindful of, and they would be: this does not constitute personal, financial, tax, or investment advice. You would be well encouraged to go get your own counsel on those matters. I have sourced materials for this presentation from what I deem to be reliable sources, namely the Social Security Administration. But of course, this is a very personal decision, and your circumstances are going to be different to the next person. So just be mindful of that. A little bit about me: I'm a tri-citizen, lived in the US for 16 years. I've been back in Brisbane here for the last 2 months with my family. I became a financial planner back in 2010. I've been a regular conference speaker, was a professor at UC Berkeley Extension and Golden Gate teaching other financial planners. And now I work with a select number of private clients on a number of issues that you can see right here. Okay, so outline for today's presentation. We're going to first take a look at how you actually apply to take your Social Security benefit, when the right time to apply would be. Of course, that's all very specific to you as an individual. Limitations on paying Social Security to a foreign bank account, whether your spouse or dependents who have never lived in the US may be eligible for benefits. What is the Totalization Agreement and how does that affect you? Earning US Social Security benefits for those who work outside of the US. Well, looks like that's appeared twice there, number 7. Number 8, we'll be going to the Windfall Elimination Provision and what reduction benefits that entails, as well as the government pension offset and the commensurate reduction of benefits for that. Lastly, looking at a very particular question that seems to come up a lot, and that is, can you get both the Australian Age Pension and Social Security benefits? And last of all, which country has taxing rights over your Social Security benefit? Okay, so how do you take your benefits? Really simple. Go to ssa.gov, click on Apply Online for Retirement Benefits, and you will be well on your way. You can only do that, however, no more than 4 months prior to your actually I think it's 3 months prior to your 62nd birthday. But is that the right time to claim? That is the question. So you'll see here, 61 and 9 months old is when you can apply for that. If it's on your own Social Security record, unless, and not currently receiving benefits on your own worker account, and you haven't already applied for retirement benefits or want your benefits to start no more than 4 months in the future. So if you want to be right on the money and get it exactly at your 62nd birthday, then 61 and 9 months old would be when to do it. So we have this flow chart that you see right here. This is available from our website. If you come here, click on arete-wa.com, we've got these flow charts available for you. Here's a higher resolution one right here. So how will my Social Security benefits be reduced? Or worded differently, when is the right time for me to take Social Security? Well, let's run through this chart real quick and we'll see what the answer looks like. So most individuals that I tend to be talking with tend to be born after 1960. So their full retirement age, that's the age at which they wouldn't see a reduction in their benefit if they were to continue working, that would be age 67. So that's their full retirement age. Can you collect benefits on your own worker history? Yes, let's say you can. All right. So do you have a pension from work not covered by Social Security, such as the Federal Civil Service or various other parts, mostly of the government? No. Let's say no in this case. Okay. So let's follow that arrow. What will be your age when you begin to collect? Well, that is the question that we're confronted here with right now. So it's at this decision point that clarifies what I was saying in the previous webinar, and that is, if you can afford to do it, looky here, you would be well advised to wait to age 70, because you're going to get a 24% increase in your benefit for as long as you live if you wait until age 70. Now, why did the IRS do that? Why did the Department of Labor do that, I should say? Social Security Administration, why did they do that? Excuse me. Was it out of the kindness of their hearts, or was it for some other reason? Well, it turns out with life expectancy hovering or in the late 70s and low 80s, it turns out that it's actuarially equal. So if you took your benefit at age 62, it's going to be reduced, as we see over here, by 30% if your full retirement age is 67, and you would be paid about the same amount had you simply waited until age 70, taken a 24% increase in your benefit. By about age 78, they're the same amounts of money approximately. So therefore, the decision rule I would put to you is, if you expect to live beyond age 78 and you have the financial means to do it, you would be well advised to consider delaying that benefit. And that's what we see right here. So the next and final part of this chart is the taxation of those benefits. We covered this in a little bit of detail in the last presentation, but essentially, the more your provisional income is, and certainly if it exceeds $44,000 married filing joint, you're going to be taxed up to 85% of your Social Security benefit, will be subject to tax. That's how that works. Okay, back to the presentation. So let's continue on there. Can I receive benefits if I'm not in the US? Well, this is a fun a bit of bedtime reading that I've had over the past couple of days here. Social Security benefits for non-citizens. The Zoom is blacking that out. There's a document right here, and it looks like what you see on the left there of your screen. Social Security benefits for non-citizens. Well, it walks us through the bullet points we see right here, and that is the Social Security Act requires citizens to be lawfully present in the US to receive benefits. This came about, interestingly, just as an aside, came about from the presence of folks that were in the US without legal means to be there, that had been tax residents, which is a different definition of residency, paid Social Security taxes, and so even though they're in the US illegally, they were entitled, until the correction was made in the mid-90s, they were entitled to receive a Social Security benefit. So if they merely departed and went back to a country where there was a totalization agreement, then they could in fact collect their benefit despite their some period, not the entire period, but some period of their US stay having not been totally documented. That is very likely not the situation of most of us here on this call here this evening. So what you see is this exception. You get down through the bullet points, blah, 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 several other broad exceptions, or if he or she is a resident of a country with which the United States has a totalization agreement. What are these totalization agreements? Coming up, we'll talk more about that. Australia has one, so yes is the answer. We're okay. What about if your spouse or dependents never lived in the US? Well, back to our good bedtime reading here with the Social Security benefits for non-citizens, we find this statement right here. So additional residency requirements of needed for, I love that very nice term they use, alien dependents outside the US, so spouses and children. So they add on all of these other conditions. Have got to have lived in the US for 5 years, and kids must have also been there for 5 years. It all gets very difficult, except if you have a totalization agreement, so this doesn't apply. In other words, as crazy as that sounds, it is still a fact. If you are eligible, if you live in Australia and you're eligible for a Social Security benefit, then your spouse and dependents may also collect on the benefit. Now, the benefit for dependents isn't that great. It's mostly just a death benefit. They pay the princely sum. Social Security Administration pays the princely sum, $255 towards funeral expenses. That would typically be the most amount, or the most, that would go to a dependent, assuming a spouse was no longer in the picture. Or alternatively, Social Security disability, but we won't be getting into Social Security disability right this moment. There is another important thing to mention here, a finer point that maybe a couple people listening to this presentation would be interested to know, and that is this. So under the agreement with Australia, Australian dependents and survivors who do not reside in the US, Australia, or a third country with which the US has a totalization agreement, then they must meet that 5-year US residency requirement. Let's turn that into English. In other words, if your child, who may somehow be a Social Security beneficiary, or your spouse has, who knows how this would happen, but people have different lives. They're living overseas, let's say in Indonesia, where there is no totalization agreement with the US, then they would be subject to that 5-year rule. But if they were in Western Europe, let's say, where most of those countries do have totalization agreements, or Japan, no problem, because of the presence of the totalization agreement. Okay, what about paying Social Security to a foreign bank account? Turns out that is A-OK, provided you're not in a couple banned countries. And we see here payments to beneficiaries outside the US. They actually tally this up. So indeed, there are a couple thousand people that are already receiving these benefits. So this is not a problem. I've alluded to this. What is the totalization agreement and how does it impact me? It is a fancy word that we've never seen before outside of this context. And it exists for for a number of reasons, but mostly for the globally mobile client that didn't stick around in the US to achieve their 40 quarters of fully insured coverage to get a benefit in the first place. What if someone had in fact worked between multiple countries and never accumulated a benefit anywhere, all the while having paid that particular Social Security tax in these various countries? So that's what the totalization agreement is for, is so that people that don't meet that total can in fact still get some benefit. So, and it avoids, there's another benefit right there, it avoids double taxation of Social Security taxes. So that right there is handy. How does this translate for us here in Australia? It would mean, with the detached worker rule, which we'll look at in another slide or two, that if you're a detached worker in Australia for fewer than 5 years, you're here by virtue of your employment, then you don't need to be paying necessarily into superannuation, which is deemed to be the Social Security tax, the 9.5% mandatory employer contribution. You don't need to be paying into that because you may still be paying Social Security tax in the US. The secondary purpose of the totalization agreement is to totalize contributions to both the US as well as the system of any other signatory country. Here's an example of a US worker who's worked 30 quarters in the US, 5 in Italy, 5 in France. That would mean, with the additional 10 quarters of the work in Italy and France, they get above the 40 quarters, and this qualifies them for a Social Security benefit. The bad news is this: they're not going to get the full benefit that they would if they had the full 40 quarters in the US. They will get some benefit where they would have gotten none before. So that is certainly a benefit. Also, it's worth noting, as I mentioned in the previous presentation, that you need at least 6 qualifying quarters for the totalization agreement to have any effect. Fewer than 6 rounds down to 0, so you're going nowhere with that. Where does the US have totalization agreements? These 31 countries listed here, or if you want to see if there's been any changes or updates, then you're welcome to click on that link right there. Earning US Social Security benefits for those who work outside of the US. Well, as you just saw a moment ago, you need a minimum of 6 credits for it to count. And thus, those individuals' benefits are totalized to ideally achieve that minimum 40 quarter benefit. Important also to note, you do not, these agreements do not allow expats to choose which system they contribute to, or at least that's not the design of the system. There is a little bit of flexibility in here for business owners in terms of who exactly has prompted their move to work in a foreign country in the first place, and therefore what obligations they have to contribute to the Social Security tax of the country they're presently in. But I'll save that conversation for individual client situations. So the territoriality rule states that expats are subject to the coverage laws of the country that they are working in, and applies to both employees and self-employed expats. And here's that detached worker rule I mentioned a moment ago. It allows the expat to continue to be subject to the home country Social Security laws so long as the employer required the employee to transfer overseas. It's expected for fewer than 5 years, and there are situations where exceptions can be granted. But in sum, that's what we have here of the Totalization Agreement. Please feel free to go back once the recording of this presentation is made available and take a look at that again. It's a very handy thing, and it's certainly provides a benefit to Americans and Australians in America. What is the Windfall Elimination Provision and the Commensurate Reduction of Benefits? Okay, so in '83, this was passed to prevent pensioners, as they've been dubbed, from double dipping on different pensions, where someone may have worked in a position where Social Security taxes were paid for a period of time and then taken up employment in another position where no Social Security taxes were paid and then get another pension from another governmental unit. It's essentially what this is all saying here. The downside here is it also applies to foreign government pensions, as we'll get to in the final slide of tonight's content. So here's how it works. The WEP formula reduces your benefit at the first bend point. We don't need to go into bend points. I skipped over that last time. But the bottom line is it's going to reduce your Social Security benefit rather significantly. So we should be mindful of that. Let's keep going here. In order to receive, you've got to have your 40. Okay, this kind of goes back to the Totalization Agreement here. In order to receive your full benefits and not have them reduced by the WEP, you would have to work 40 quarters in the US, but also 30 years for the WEP not to apply. So that really raises the bar. So 30 years of Social Security paying employment. And then if you went and worked for the county or the state or some other federal department, you somehow vested in another pension, then your Social Security benefit would not be reduced. Okay, what's this here? Totalization agreements can help an individual to receive benefits where they would not have otherwise met the minimum time. Thus, the benefit is, yes, you're going to be paid some benefit here. The WEP affects any worker who earned a pension in a job in which he or she did not pay Social Security taxes, but also worked in other jobs. I mentioned that a moment ago. I think this particular slide is out of order. Excuse me there. Okay, let's take a look here at the Windfall Elimination Provision and the flow chart that we've got dealing with this. It's pretty straightforward, not nearly as the number of contingent variables here. So let's start here. Will you receive a pension from an employer that did not withhold Social Security, such as a government agency, county, state, or federal? Okay, yes, let's say you did. You worked in the judges' retirement system, let's say in California. I know for a fact they don't pay into Social Security, so we would see that at one of my first jobs as a financial planner. We had that contract with the judges' system, and I knew that they were often hit by this, and it was a rude surprise. Do you qualify for Social Security from work you did in other jobs? Yes, maybe they worked in private practice for a period of time before they became a judge. Are you a federal worker in the FERS? No. Okay, FERS, it's a pretty obscure thing. More than 30, we're coming on 38 years ago. No. Okay, is your only pension from railroad employment? No, we're talking in my hypothetical example here, those California judges, that is not railroad, so no. All right, will you have 30 years of substantial earnings? No, because most of these judges didn't actually work for 30 years. They may have worked for nearly 30 years before getting into the judgeship, but no. Bad news, they end up incurring the WEP. What's the alternative here? Sorry, you pay the WEP. Will you have 21 to 29 years under Social Security? Let's say yes. There you have it. So Social Security benefits will be reduced by the lesser of half your non-covered pension or a Social Security Administration calculated amount, depending on the number of years of substantial earnings and your eligibility year. So that is the Windfall Elimination Provision, and unfortunately it affects foreign government or foreign pensions as well, as we'll see shortly. Now, what about this other acronym, Government Pension Offset, and the commensurate reduction of benefits there? This is something that really affects spouses and widows or widowers if you receive a retirement or disability pension from federal, state, or local government based on your own work for which you didn't pay. So similar to the WEP we saw a minute ago, your benefits to your widows or widowers may be reduced, but not by more than 2/3 of your government, but will be reduced by 2/3 of your government pension. So quite a reduction indeed. If 2/3 of your government pension is more than your Social Security benefit, your benefit could be zero. So that's not a good news story either for those individuals. But remember, it's about equalizing for the total amount of benefit that should be provided. So government pension offset. Are you receiving spousal, widow, or widower benefits from Social Security? Okay, let's say you are. Yes. Okay. Are you employed, or are you a federal employee who switched from CSRS or FERS, federal employment, after 87? Let's say no, you're not. Okay, so no. Were you receiving a government pension before 82? You better be really old for that situation to apply. No. Were you receiving a government pension before 83? Let's say no. Are you receiving a government pension for your job? Okay, let's say yes. Are you receiving it from here? Sorry, you're subject to the government pension offset because of, it's the same thing we're dealing with a minute ago, to do with double dipping with the government pension. So that's what this one is for. Is it really affects the dependents rather than the primary recipient of that pension. Okay, whoops, excuse me, that was my mistake. Let's go back to that slide. Where were we? I believe we were right here. Okay. Now let's look at which country has taxing rights over Social Security. If you are in Australia and you are entitled to a Social Security benefit, then, surprise, surprise, and I'm saying that sarcastically, it should be no surprise, the US is one of the only countries in the world that has citizenship-based taxation. So just like all your worldwide income, Social Security is subject to taxation. But actually, it's for a different reason in this case. And that is, in the Internal Revenue Code, the US specifically retains primary taxing rights on Social Security. So it wouldn't matter, unless you're in Italy, it wouldn't matter anyway that the US will be the primary taxer of that benefit. Let's look at a different scenario. If you were an Aussie who worked in the US for a period of time, more than a decade, you vested in Social Security, you moved back, you have no incidence of US legal residence, namely you're not a green card holder, you're not a citizen, your visa is expired and you move back, you're free and clear of the US, doesn't matter, Uncle Sam will still withhold on that Social Security benefit. Okay, the double taxation treaty specifies that the source country is going to be wherever it's paid from. Thus, conversely, if you are an Aussie in the US or an American who's returned to the US after living in Australia, then Australia is going to have first taxing rights on the payment of your superannuation when that gets taken out. So under current rules, if you're a US citizen in Australia, your Social Security will be taxed at the US progressive rates under the same rules that you would see in the US. Namely, this is another shameless plug here. As you see in my key financial data sheet, it would be these very same tax rates that you see over here. So that's what's going to apply to your Social Security tax, to your Social Security benefit. But if you're no longer a US citizen or US tax resident, then the US will withhold at a flat rate of 25.5%. It's totally possible that if you are still a US citizen, that you could end up paying less tax than the other way around, and then the flat 25.5. But of course, individual circumstances will totally dictate that circumstance. It is worth mentioning here, just to dispel a common misconception about how one might use the federal earned income exclusion, sorry, the foreign earned income exclusion with regards to Social Security. Well, the answer to this is written right there in the title of the FEIE, and that is earned income. Social Security is not deemed earned income, therefore you couldn't use it anyway. So again, you're on the hook to pay the progressive US rates on that benefit received, subject to what your modified adjusted gross income would actually be, which would determine the percentage of taxation. Okay. Which country has taxing rights? What do we have here? This is more dispelling a myth that we might see out there on the internet. What if you just relinquished your citizenship? Would that improve it? No, it wouldn't. It wouldn't improve it one bit. In fact, it might worsen it. You'd be back at that 25.5% flat rate we saw a minute ago. Also, this is a very significant decision that one would not make lightly. It's also expensive too. It might cost you $20,000 once all the attorneys have been paid to actually do that. But there are circumstances where that may make sense, but I'm certainly not recommending that to anyone in this presentation at the current time. It's also worth noting that, and it's implicit in the examples that I've given here, that you don't need to be a US citizen nor a permanent resident to actually receive your Social Security. As you heard me say earlier with an example, if you have merely been in the US on some kind of visa and paid Social Security taxes for more than 40 quarters, regardless of your US legal residency, you would still be eligible for that benefit back in Australia. Okay, so can I get both the Australian age pension and Social Security benefits? Well, yes, but with some strings attached. So keep in mind the Australian aged pension is both income and asset tested. Let me see. I'm going to go out on a limb because it's been a little while since I put this together. We're waiting to update this. Superannuation, do we have? I'm just wondering if there's anything in here about qualifying for the Australian age pension. No, there isn't. But essentially it's incomes and asset tested. The limits are fairly low. So it's not as if you're missing out on millions. And the amount that is paid, by the way, is also not a whole lot of money either. This certainly wouldn't apply if you're outside of Australia, given that a condition of receiving the benefit in the first place is that you're resident in Australia. So it is therefore conceivable that you could be in Australia and receive the Australian age pension and US Social Security payment, but it would be subject to the government pension offset anyway, so you're still not going to receive that much money in this hypothetical scenario. Some white papers, contact us. Of course, I'd welcome you to attend our presentation next month. I've yet to set exactly what that will be, but we'll be in contact there. And I'd like to take questions if you have any. I'm just going to close the window. Can we get a copy of your presentation? We'll see about that. This will certainly be available. This will be recorded and available on our YouTube channel. As for sharing the slides, I don't think we've arrived at a decision on that one. I think this particular topic is a little more meaty, a little more weighty than last month, and so I think people's heads are probably spinning with how this may apply to different folks' situation. But let's just give it a moment and see if anyone has any questions other than Michael there. Any other questions that folks have here? Hi, Kim. I'm not sure if I followed this properly. How does your superannuation amount impact your Social Security? Does it affect the WEP? Okay, that's one that I want to punt, to be honest, because I have never, and I don't want to say this with certainty, but it's my understanding that it wouldn't. It would. Let me back up a step. First, the amount of your superannuation that would have clearly affect your Australian aged pension amount. But as for Social Security, I don't think that they're related. If someone wants to prove me wrong on that one, then by all means, but I don't think that they have anything to do with each other. There was a question someone wrote in beforehand to do with that, as to whether they affected one another, but I don't think they have anything to do with one another, because that is not deemed to be a strange. On the way in, it's deemed to be a Social Security tax, but on the way out, it's not deemed to be a Social Security pension, the superannuation, that is. And I don't think it affects the WEP. Any other questions? Megan, hi Megan. I hope I'm pronouncing that correctly. It could be the US pronunciation, Megan. Thank you. Okay. Do both spouses need to claim Social Security pension in the one country? If one partner had worked in Australia but not in the US, and the other worked primarily in the US, you would still need to claim separately, but we have to be clear about which benefit you're claiming. So Megan, I might have to take half a minute and reread your question. If one partner had worked in Australia but not, okay, in that case, let's look at your example here, Megan. So one of you's worked in the US, one of you has not. By virtue of that totalization agreement, the spouse, the partner that had not worked in the US, would be eligible for the spousal benefit, which is half of the primary worker benefit, even though you've never worked in the US. So this is a blessing, this is a godsend in the situation, I think, that pertains to you here. So you're getting money for nothing from the US for by virtue of being a spouse here in Australia. I shouldn't say that, I should apologize. Money for nothing, that's not, it was designed intentionally, but it's good news, and I'm sure you'll forgive me for saying that. Given that good news. Michael, you mentioned that our Social Security payments can be paid into Australian bank accounts. Yes, I did. What are the steps to affect this? That is a perfect question for the Social Security Administration. I don't know as to how one goes about doing that. That would be something to talk to the Philippines office of the Social Security Administration on, and ask them about that. Corey, hi again, Corey. Is the Totalization Agreement likely to be threatened and change geopolitics? I don't think so. I have never, and obviously I keep my ear pretty close to the ground on these topics. I've never heard it come up before. I never heard it during the Trump administration that these were being threatened. I will say Social Security is certainly a political football, and in much of the reading that I was doing in preparation for this webinar, it was a lot to do with Mexican illegal immigrants that had been in the US in the 80s, amongst other countries, I might mention. There were controversies in the 80s and 90s about workers that had been in the US illegally, that had nevertheless vested in Social Security and then returned to their home countries, and then had, spousal benefits and dependent benefits and all sorts of things. That's what led to the crackdown in the mid-90s, and so a lot of that abuse, to my knowledge, has receded. Wondering if there is any point in planning for this if I plan to retire in 30 years, lots of unknowns. You know what? I think I would revert to my general advice at that point in time, and that is, are you on track for a healthy, comfortable retirement? I know for my clients, and I mentioned this last webinar, we tend to use 3/4 of their eligible benefit as the amount that they would expect to receive. In your case, I'd have to wonder that you're not fully vested in Social Security. It seems as though by virtue of the question, you're implying that you've got fewer than 40 quarters, therefore you have to rely on the Totalization Agreement to receive any benefit at all. If that's not the case, then I wouldn't worry about it. Michael, if our Social Security benefits are taxed in the US, do we have to report this as income to the ATO? That's another great question. Do you have to report that as income to the ATO? I believe you would, but you would also be eligible. There would be a tax credit for that because you've already paid taxes on it. The whole point of the tax treaty is to avoid double taxation. So I would include it to the ATO. Better question for an accountant as opposed to me, but I don't think you'd get double tax on it. Nevertheless, it's a good question for an accountant, and you're probably going to be declaring it, but probably not paying double taxes on it. Okay, that has been enough time, I think, for people to get their questions out. I have found a very funny phenomenon, and that is when I am just getting ready to say goodbye, that suddenly there's a final shakeup of questions that that are prompted with that. But if none are forthcoming, then I shall call the end of the presentation. Thank you very much for your attendance here today. I hope it was valuable, and I look forward to seeing you next month for another topic relevant to Aussies in America and Americans in Australia. Thank you so much.